guys, my name is Nomhle and welcome to our Financial Markets Literacy channel. So this is going to be very, very brief. Just getting into, or it's a continuation of our technical analysis and series that we have started. Today we're just going to be looking at the different types of charts that you get when you are looking into technical analysis. So basically we do have advantages and disadvantages of trading with technical analysis, and one advantage is that it can show you exactly where the entry point is and where you can exit in the market. And it tends to be, in some cases, it tends to be correct. I'm not going to say all cases because that's not a fact, but in some cases it tends to be correct, and majority of the time a lot of people will use technical analysis just to check out where exactly they should be entering into the market and where they can get out of the market as well. So that's one of the advantages, telling you exactly when to get in and also giving you an indicative price of where you can get out. Now, the disadvantage of technical analysis is that in some instances it also needs to be used, or rather most instances, it also needs to be used with fundamental analysis. We did touch base on this last week when we did make mention what is the importance or which is the most important analysis between your technical, fundamental and sentiment. And like I said, it is a relationship, or it's a three-legged stool where you need to use all three of them. But for the purpose of this particular video, we're only focusing on technical analysis. And obviously, as said, it is very important not only to use a technical analysis on its own, but also to leverage on the other forms of analysis that are available as well. So when you're looking into technical analysis, there's obviously different types of charts that you can have a look at. The first one is called a line chart. So a line chart is basically a line that connects from the open to the closing price. So you won't be able to tell whether this one was for 1 minute, this one was for 5 minutes. Everything is just connected, and then it obviously shows you the direction of the market at that particular time, whether it is bullish or whether it is bearish. So the lines are connected, like I say, and you'll be able, however, to see the direction of the markets at that particular time. So that is the first one. It's called a line chart. And then the second one is called a bar chart. Now, a bar chart will show you where the opening price is and where the closing price is. As this illustration will show you, or the image right now will show you, is that the opening price will tend to be on the left hand side and of the wick, and then or the line, and then the closing price would tend to be on the right hand side of the line. And obviously the bottom of that line will show you where it was at its lowest point, and the top of that line will show you where it was at its highest point. So that particular bar chart could be of any time frame, from 1 minute to 5 minutes to 15 minutes, 30 minutes to an hour, 1 week or 1 month. It doesn't matter. It's all showing you the same thing. It's just showing you what is happening or what has happened in that time frame or for that particular time frame. So when you're looking at the bar chart, you'll obviously be able to see where the opening price of the instrument was and where the closing price of the instrument was. But you just need to remember that the opening price is always on your left-hand side and the closing price is on the right-hand side. Now, the longer the bar chart, the more volatility it shows you there was in that particular time frame. And then the shorter the bar chart also indicates that there wasn't much volatility. So when you're looking at a larger one, you need to know that there was high volumes when it comes to volatility, and the small ones obviously would be the inverse of what that is. And then the third one is the most favorite and most popular one, is called the candlestick. Well, a candlestick is also a variation of the bar chart because it also shows you the opening and the closing of that particular instrument within the time frame that you are looking at. And it also shows you the highest and the lowest point that it was. So this illustration will also show you, for example, the bottom of the candlestick is the opening price and the top of the candlestick is the closing price. And I'm only making mention of the body of the candlestick and not the two wicks that you would find at the ends. So the two wicks that you would find, or the lines that are standing out at the top and the bottom of the body of the candlestick, those ones will show you where it was at its highest, and it will show you where it was at its lowest. So that's how you would define a candlestick. Now, a candlestick also in most instruments, or rather in most platforms, when you're looking into a bearish candle, or rather a candle that shows you a downward movement, in most instances it would be red. Or you would also find another candle that is green. So the green one would be showing you a bullish market. It would be showing you basically a market going on an upward trend, or showing you that the markets are going up for that particular time frame. So then you'll be able to distinguish exactly whether is this one going up or is this one going down. So now the difference between obviously when the open price is and the closing price would be is that if you're looking, for example, at a green candlestick, the opening price would be at the bottom and the closing price would be at the top. But then if you're looking at a red candlestick, the opening price would be at the top and the closing price would be at the bottom. Now, same goes for your bar chart. When you're looking at a positive or an upward bar chart that shows you a bullish movement, the opening price will be on the left-hand side still, and the closing price will be on the right-hand side. So that's how you would distinguish whether that was going up or that was going down, if you are unable to tell or identify whether that was where exactly the entry and where the closing prices were on those particular charts. All right, so that is it for today. It's just focusing on the 3 different charts that you will find. And next week, what we'll be doing is just going further into technical analysis. We'll just make mention of the type of tools that you can use, or rather the indicators that you can use that can help you as well analyze the markets better, and so that you can understand exactly when you can get in and when you can get out. It's not going to be a lot of indicators, I promise, so that you can also go and practice on your own and see if everything is coming together. So thank you so much for joining me. Hopefully I will see you again next week. Just don't forget to comment, like, subscribe, and share, and click on that notification button so that you can know when we are releasing our next video again. So thank you so much and have a lovely rest of the week. Take care and goodbye.